Afternoon all. Afternoon to you, Armand, Stevie. Hoping to absorb some profits today. Good fun. The opening range breakout from this morning's doing very well at the moment. So I'm long on the DAX, nicely in profit at the moment, $900 in profit at present on that one. This one's 577 in profit on that break. But obviously these are, we had a failed break to the downside initially. So it depends how you had it set up as to whether or not you got into a loss there and how much of a loss there, and depends what your stops were, whatever. But obviously the opening range breakout this morning was long. So they're all working out very nicely this morning or this afternoon even. I'm tempted to shut some of these off. But obviously if we get a big strong push on the US indices this afternoon, then these are going to fly. Well, the DAX will go with it. So I'm just worried about this DAX coming down this afternoon because we've got a very weak US dollar at the moment. See, the US dollar is now pushing, which is indicative of, I say it's pushing, it's not weak. So that's indicative of strength in the indices at the moment with this weak dollar. And obviously if the dollar strengthens this afternoon, the US indices will come down and the DAX will come down with it. So obviously we don't know which way it's going to go, but I am expecting some strength on the US. But whether or not that comes today, we will see. So Euro US dollar, I've just taken a short on that up here. Actually, the EA has just taken one too. So I'm in one, EA's in one. I've got an ad underneath the Asian low. Sorry, not the Asian low. That's the Asian midline, London low, basically. So this is the London session here. So I'm adding one if we break the London lows. Getting in fairly aggressive on this Euro US dollar. Two reasons. First, this is an evaluation account, and made some losses with the EA this morning because I was testing it live with a strategy I haven't tested before, which broke. Yeah, I'm falling a bit behind in profits, so I need to do some catch up. So I'm getting a bit aggressive with the Euro US dollar short. We'll see what happens. That pound US dollar short will come down with it as well. So if this trade plays out, this trade will also play out. If both of these play out at the same time, I should be able to bag a couple of grand today, but I need some US dollar strength, which is the problem because I'm actually long indices at the moment. So I'm hedged against myself. I'm always hedged against myself, aren't I? Morning, David. So I'm testing, again, I'm doing another test this afternoon live. This may well go really wrong. That's the beauty of live testing, isn't it? Live TV goes wrong. So I've got this set file that one of the guys gave me, which we tested this morning, but it was way too tight. So I've got a variation of it, which is still very, very tight. It's using a 10 pip trail, a 10 pip stop. So for example, on this candle here, let's say we're breaking out on the top of this candle here, our stop loss is going to be here. So the idea is, well, we'll see it unfold anyway, but I've just done a test on it on here so you can actually see it. So that's the set file that I'm running. Did 115k off of a 17k drawdown. So basically the way it works is, afternoon Seymour, it basically uses 3 opening ranges, which are different. Idea being, let me get to the first one. Idea being, when we get the open, there we go. So we get the initial opening range, okay? One of two things tends to happen on this opening range. Either we break and go, and we go into a lovely, big, strong trend straight away, and we're all happy, and everybody's like, yes, that's amazing. Or what we do after this opening range is we get an inside bar, okay? Now, if that inside bar happens, what this strategy does is it then tries to trade that inside bar. So if I move on to the next opening range, there we go. Opening range 2 is here. So what it does is it takes that candle. If we haven't broken out on this candle and we're off, it then goes, right, let's have a look at the next range. And it will take a range break of that inside range. And then it will wait another candle and it will take a third one. There we go. So there's opening range 3, which is that candle there. So we take the first candle, we miss one. We take the second candle, the third candle, we miss one. We take the fifth candle. So when you get situations exactly like this, which is just so happens to be the coincidence of when I do my testing, which is weird. This is exactly it. Basically what it does is it waits for that strong move after the open. So we either get opening range and then a load of crap like we had this morning on the DAX. So the DAX is a prime example of exactly what this type of strategy works with. Yeah. So this, what we had this morning, opening range, utter crap all morning. And boom, off we go. So what this strategy does is on these types of days, it can actually do very, very well because what it's done, as you can see here, let's see what it does. Move it along. There we go. So it banks 6.5 grand. But it did it because after that initial cash balance went in, the market went, I'm not sure where we're going to go. And then somebody went, I want to go long. And then they went, all right. And it wins on that, and it then takes the opening range original. So it's actually a really good strategy. It's a variation based on the 5, 10, and 15 minute, which I use. But what it does is it just skips one in the middle. So what we're doing is we're just slowing the opening range break down from 15 minutes to 30 minutes, but we're taking ranges in between. Interesting. So the guy that came up with this, one of the guys in the group, I don't know if he's in here. Are you in here? Let me know if you're in here. That's what we tried to trade this morning, but the stops were far too tight on it. And it made £250,000, you know. So yeah, it was no wonder it made more than that, made about £500,000 in a year. But that's because it's virtually impossible to get the trades on. The trades are too big. So what I've done is I've set it up to use 10% of the opening range and a 10 pip stop. So if we get a big opening range put in, so the market's just opened. So if we get a big opening range candle in, it will place the pending order with a 10% stop, which will be around here. Idea being if we're in here, yeah, muck about. When we break, I want that to go boom, not like that. If it does that, I want to be out. If it does that, fine, I want to be on board, and then we'll trail with it, and we'll trail tight with it. If it's a tight candle at the open, we're going to have a very, very, very tiny stop loss, and we're going to get basically 100 lot entry because the stop's going to be too tight. So I'm still playing with the variations, but the testing that I've done this morning on it, although minimal testing, is all pretty good. And there's various stops I've used ranging from 10% to 50%, and they're virtually all profitable, but with varying ranges. So we'll see how we get on. It's just while I'm talking, is the stream quality okay? Because I've got MT5 doing a back test, and it's using 18 of my 20 processors. So let me know if the stream is all choppy and hideous, because if it is, I will I'll pause that. I don't know, can I pause it? I'll have to stop it. Yeah, I can only stop it. But let me know if the stream quality is hideous. Quality is good. Okay, that's good. You tested, David, you tested the EA on gold since you've traded gold with the 8 a.m. open from the 1st of November to the 31st of December, and it generated 27% on a maximum drawdown of 6. Brilliant. Stream's good. Cool. That's really good. So that's from the 1st of November to the 31st of December. So that's 2 months of testing. Send me your set file on that, David, if you can. DM me. And I'll do some more testing on it and see if we can get some optimization done on it and because it'd be good to have a gold set, which is basically trading something that's not indices for people that want to trade gold at the open. So we're pushing at the open. So these ORBs from this morning are still doing well. Cool. I've got another one running, which might actually have hit target. Let's have a look. Oh no, that was stopped out. Gutted. This variation of the ORB is running a tighter trailer. So tighter trailer made a little loss today. Never mind. The other two are doing all right. Right, so we got 1 minute left on the candle until the close. We'll have a look at all the FX pairs and everything in a minute. Wow. This is what I'm thinking today. Rejection and drop, which makes me want to really close these out, but I'm not going to. I'm going to let the EA do its thing. Going to be good because I'm looking for US dollar strength, which means we should have a drop in the index. No strength showing at the moment. Euro US is showing a little bit of weakness, so there's a bit of strength there. Let's see if that's euro. Certainly not the euro, is it? Yeah, it's not really anything at the moment, is it? Okay, so there's opening range 1. So you can see how tight these stops are. So there's your sells there. One of them is a 10% stop, and the other one is a 10 pip stop. So the opening range is 45. So I've got basically a 10 pip stop and a 5 pip stop, or a 4.5 pip stop. Really, 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 really tight. 68 and 30 lots. So, and it's obviously trailing. So what we're looking for is that we need a candle now to be fast and hard and get down below this level and stop. We've also got TPs on these. So this is a take profit strategy as well, by the way. Should have mentioned that. So we're not looking for home run trades. We're looking for risk reward trades on this. The idea being we're catching momentum. So it either goes, it does it, we're out, or it doesn't. Let's see what happens. I've got a feeling these are just going to stop out. Look at the volatility. Okay, so we've short both of those. Stopped out. Yeah, this is the problem with this strategy. Stopped out. So what you're going to get is this is why this doesn't work. You're going to get too much of this. You're going to find probably 60 to 70% of the time that's going to happen. The percent of the time it doesn't, you're going to make 3 to 6 grand. So the problem with this strategy, I think, is people have, I mean, me included, hacked off of it. I just lost $1,000, just literally in that, 4 seconds, 5 seconds, lost $1,000. Could have won 6 though, if that candle, instead of doing that, had just done that. Same as that one. Yeah, so this is the problem with this high sort of scalp, high risk, high scalp strategy. So I think what I need to test on this, because it is profitable, it's too tight. I think what we need to do is come up with a kind of happy medium where we've got a 50, something like a 50% stop. So we would still be in these trades now with a 50% of the opening range break stop. And then your TPs on it are going to be much, much, much further down. So it's going to take a lot more to get target on it, but you are going to survive in more trades. It's far too tight still. Because the setup we had this morning was like 4 pips, wasn't it? So it really depends on what your opening range is here. if that opening range is, as it is quite often, 800 to 1,000 plus in the Nasdaq at the open, you're going to have a 8 to 10 pip stop. Whereas it is at the moment, I got a 4.5 pip stop, which is, the spread's 1 pip pretty much. So it doesn't work. So I reckon you need something around a 30 on that, and maybe a 20. That's possibly a little bit more realistic, but we'll see. I'm sacrificing my funded account for this, not funded account, evaluation. I've got a load of others running, so I don't really care. Anyway, we'll see what happens on the next candle. So we're going to skip this candle, and then we're going to move on to the next one. But if this closes above here, we all get extra pendings in place. Possibly. So just change the settings. We'll see what happens. Right. So oil, looking at where we are today so far, obviously we've had a few ADR hits. We looked at these this morning. There's been no news this morning. Nothing of interest at all come out this morning. Obviously, there is no news today. It's bank holiday, basically, in Japan. That's the news. So oil, I took one off this morning. Hello, oil. Up here, which is one of the ones that I took yesterday. I've got 2 positions still running on it long, hoping we're going to get some support bounce down here or sitting in this propulsion gap, which is off of this little accumulation here. But yeah, still long on oil, but I took that off because we hit ADR basically. So it was likely we were going to get a pullback at ADR. We got the reversal alert on that accumulation. So I took one off of that. The ADR hits we had this morning were US dollar Swiss, which we looked at already. So that came off of ADR absolutely perfect to the pip, and then retested and dropped. So that was lovely. Good reversal at ADR on that one. The other 2 that we had were the pound yen and the New Zealand yen. So again, I was looking for shorts on these. We got exactly ADR pretty much, got the reversal alert, got the retest, and that dropped. And then pound yen as well. That one came off of ADR perfectly as well. And then came off the highs there, and then euro US dollar, which hit. And I've just taken a euro US dollar short at ADR. So nice potential M pattern there. So looking if this pushes up for a retest and drop on that one. So that's your ADRs. RSIs, we'll have a look at those in a sec. Let's just quickly see what's going on with the NAS. Yeah, it's not going to take an additional. That isn't set up to take additional trades. It's only going to take one. So we're back on the inside range now. So again, the idea behind this this 5-minute skip one, then look at the 10-minute range is if we are contracting within the opening range, we know we're going to break out of that opening range at some point. So what we're doing is we're now looking at the inside range of the opening range, and we're trying to grab one there. And if you've got additionals turned on, you'll grab a second there, and off we go at the bottom. So it's a really good variation and an idea on the strategy. Just trying to find the optimal settings for it, really. Works really nicely on the DAX. I haven't actually done any proper testing on the NAS. The problem with the NAS is obviously volatility. It's so volatile compared to the DAX and the Dow. So this may be a strategy that is actually better for the DAX and the Dow. We'll see. Right, so RSIs, Aussie dollar, excuse me, Aussie dollar yen. That one is a 4-hour extension to the upside. So again, we looked at this one this morning. Want to be short. That's where I looked at us getting to. That's where we got to. That's where we come from. So it's all starting to play off of that one as well. So all these yens, basically, you had reversal alerts this morning on these. All good trades to take. US dollar CAD is extended on the 4-hour still. That's just started to play out this morning as well. which is great. So lovely little reversal alert there. We had a 15 as well this morning in the London session. So this level was what we were looking at. So it appears there probably was liquidity under that, because they did that bounce off of it at the double bottom, swept it, and then pushed back up again. So who knows? Same with the euro US dollar. It's the same principle. We're looking at liquidity run on this level here. I still think there's a possibility of taking this, which is why I've got this area I'm getting in. I'm not sure exactly where they're going to stop up here, but if we are going to get this US dollar strength, and this is just a final reach for liquidity before we actually put in the real move off non-farm payroll, that could well be it. And that falls in line very much with the US dollar CAD level as well. So we'll be looking to come back up and retest the propulsion gap caused by non-farm payroll. So that one looks good. US dollar CAD for a long. That's extended on the hourly as well. You see massively extended on the hourly and extended on the 4 hourly. US dollar Swiss is extended on the hourly as well. So we had a big strong push down on this one. Not quite ADR. Look at that, 91.7 of 92. So we just missed ADR on that one there as well. So US dollar Swiss is a potential long. US dollar Swiss is a bit of a mixed bag at the moment. Sentiment on it was a long, but retail's gone the other way, which has kind of taken this out of a buy now into sort of a range bound trade. So I like it, but it's a messy pair, really messy pair. So it's very difficult to trade when this thing can just go into these crazy runs at the moment. US dollar weakens and you get the Swissy powering up at the same time. It just absolutely flies. So we will see on that one. But we've got down to this potential support. We've got lots of support coming up as well, all around this level. So this whole area here basically is potential support, which is 150 to 200 ADR. So from a position trading perspective, obviously 4 hour and we're not quite extended. Hourly we are extended and quite deeply extended as well. But let's just draw some of those levels in. There is an awful lot of areas here we can look at. So anywhere really in that 150 sort of 150 to 200 ADR area is a good potential long. So if we get down to there without doing a profit take move from here, it's going to be very, very hourly is going to be exhausted, and the 4 hourly will then become extended as well. So we should then obviously get our profit take move. But there is no directional bias on it, and as you can see, we've just gone into a range over the last week or so. So I kind of like this one where it is down here as well. I'm already extended on the US, so I can't take it myself. But so we've just got to break out the highs there. So this is the type of momentum trade that you need with this strategy. You need a candle that just goes, yep, I'm a bull candle, and doesn't do this. None of this pulling back. We haven't got room. We're trailing stops at the moment, so we've not got no risk on these. We're just going to stop out a break even on them if it pulls back. But what we're looking for is basically just slam, slam. We're looking to catch that break, but we're looking to catch it with very, very high lot size, because we've got very, very tight stops. So your rewards are there, like bang, 10 minutes you're done. So it's a totally different strategy. It's super, super high risk, super fast scalping, as opposed to what I'm using the ORB for, is for catching. This is what I'm looking to catch. I'm catching this. So it's a different strategy, but again, it's something you can do with it. So let's see if we get these hit today. This is running on a trailer. I think it's running on candle close rather than tick. Oh, no, it's running on tick. So yeah, of course it is, because we're break even. So so this is basically trailing. You'll see these trailers get dragged up, we would if we didn't get a profit target alert. So there's TP on 1. We're trailing, trailing with this. Trailing 250. Oh yeah, I extended the trailer on it as well. So it moves to break even after 100 and then it trails at 250 because again, it was too tight. I had this set to 10 and you know, you're ticking up and then there's ever such a slight little pullback within a candle and pop, you're out. Just doesn't give enough room, but it's got a lot of potential, this strategy for a scalp. So mixing this in, so mixing this strategy with this strategy, you know, you'll grab the trend and grab the scalp on the same day, you're done. You can be done in a day, literally. Really good. But like I say, you are going to get a bit of chop with this. So I will test it further. So we've got three long at the moment. We've got TP at 2 to 1, 3 to 1. What did I set? I can't remember. I was picking different ones. So yeah, 2.5 to 1, 3 to 1. And then the third one, which we haven't got yet, have we? No, we haven't got the third opening range in yet. Third opening range will be a scalp, a really tight scalp, 1.5. So it's opening range 1. So I'm just kind of doing this as I go. Opening range 1, opening range 2. Pause candle. This is going to be opening range 3, this candle. So whatever this candle is, we're going to have additional entries on. Right, let me just go back to what we're doing. So yeah, US dollar Swiss, I like this. Obviously at the moment we've got a weak US dollar still, so we'll be pushing up on the US dollars. So US dollar Swiss is coming down. The only reason I know that is because the Nasdaq's pushing. Otherwise, if the Nasdaq is pushing, the US dollar is coming down. So so yeah, I like this. I really like this down here. So US dollar Swiss, what I'm going to do I want to do an hourly? Can I take a US dollar? I'm exposed on the US dollar already. I can't take another US dollar Swiss. So I'm not going to take that one myself, but I like that. So I'd be waiting for a reversal alert on this. So your next reversal alert is going to be there, or 15-minute reversal alert. It's pretty much in the same spot there. Euro CAD, ADR. Canadian dollar looks like it's dropping along with the Canadian dollar is also dropping along with the US dollar. There you go, US dollar Swiss is hit ADR. So we should have some more movement to the upside on the Nasdaq. That's good. DAX is still rallying as well. So very close to TP2. And this is going to have an opening range. This is going to be an opening range candle as well. So this is our third opening range candle. Now, the other good thing about this, which I like, again, I like a lot about this strategy. There you go, TP2 hit, is if now what happens is we get a false move to the upside at the open, which happens, don't forget we're only sort of 25 minutes into the open now. And quite often what we will have is a push and then a reversal. If that's going to happen, what we do is we catch the reversal back down on opening range 3. Because opening range 3 is outside of usually opening range 1. So you either get this thing where you get the opening cash balance going, and then you get inside bars and inside ranges, or you get the breakout happen and you trade continuation, and then you get a breakout happen and you trade another continuation, or you get that push and you get that reversal. So this candle here, when we close inside of this, we're going to get pendings. So if this now comes back and retests this area, we get a trade short. So it works. It just works really well, these timings. Not something I'd thought of. And I can't take credit for it because I didn't do it. But just somebody that was developing the EA or just testing the EA came up with it. So just we'll see this one play out. We'll see if we can get a profit off of this. So this is a tight scalp. This one is set up for a tight scalp. Just a 1.5 to 1. And again, these you can change. There's very little in it. If you go for 2, I've tested very many variations of that. In fact, that's what this is running now. Look. This is running all those permutations. This is running a system parameter permutation test on the TP levels here. And you can see 150, 100, 100 produces 100 grand. That produces 200. That produces 270. That produces 145. But the interesting thing is the drawdowns on them. Yeah, drawdowns range are very small. And it doesn't matter whether you use a 3 to 1, 2 to 1, or 1.5 to 1 TP. Every combination of it produces a positive return with a small drawdown. But this is the opening range stop percentage. And you see the 10s are all at the top. But as I say, getting those executed, I think, will be a struggle. So there's that opening range gone in. Now, that's the third one. Okay, and it's taking 2 trades, one with a 10% and one with a, what did I change it to? 25. 20. So one with a 10% risk and one with a 20 pip risk or 20 point risk. Which, as you can see from the stop loss values, is a lot more realistic. So entering there, stop there, and stop there, entering there, stop there, and stop there. So that's 20 points, and that is 10% of the opening range. On the opening range 3 was 350, so it's 115. Oh, sorry, 10. So we'll see what we get there. So either Nasdaq's going to continue to push, in which case we're going to carry on with this. We're going to carry on the trend. We're just going to jump on again because we've taken loads of profit already, haven't we? Or we're now going to do a pullback. Yeah, push, pullback, push. So we'll grab that. So, you know, one of those two things tends to happen up here, doesn't it? A lot of the time. So it kind of grabs the best of both worlds. And this is kind of something I've been thinking about with the Al Brooks's strategy. Al Brooks's theory on the 1.5 hour limits, which has been proven over and over and over again. So after the market has been open for 1.5 hours, you have usually seen the high or the low of the day. So if you've had a rally 1.5 hours into the market open, normally the opens the top's in. So I was looking at potentially taking the 15-minute range from 1 hour 15 to 1 hour 30 and using that to try and grab those pullbacks, because if that's the high of the day, you're not going any higher, you can take a short. So that's a strategy. Again, it's on my list to test, which you can obviously trade with this as well. So. So you're stalling out now. So that's your opening volley, if you like. That's where all the vast amount of that liquidity's gone. Now we're a bit tired, having a rest, having a bit of battle. See whether we've got more buyers or sellers. One of them in the minute is going to win out. and then we will get on board with them and hope that they've got enough to push us through. Right. So yeah, US dollar Swiss really like. Euro US dollar is obviously extended on the hourly. I'm in that already. So it's got the shorts on there, looking at that liquidity run. And the other one we've got is the Aussie dollar US dollar. That is also extended to the upside. Again, same thing, liked this morning. We looked at this one this morning. Don't know if anybody got on it this morning, but the reversal and retest was very, very tight this morning. So we were on, weren't we, I think, when we got we were looking at the retest, weren't we? So again, looking to come back down into the propulsion. But again, it's a 2 to 3 day move down to 175 ADR. At the moment, obviously, all we've done in London is go sideways because we've had no US dollar strength to help us out. So again, that's really nicely extended to the upside this morning. Nice end pattern reversal potentially, excuse me, going in there. So that would be worst case scenario. Best case scenario is obviously the US dollar powers up and we put in a new low, undoing non-farm payroll basically. Expected move from non-farm payroll and unemployment claims was that. We got that. So that is still the move. We just need to wait for them to stop mucking about. Okay, long again. So the danger I see personally with this with this strategy is exhaustion. If you've got the range breakout already playing out and you're taking a continuation trade up there, you kind of missed the boat, haven't you? So this is the danger of this this type of trade. But you know, either works or it doesn't. So we got a 15, a 28. Afternoon, Luke. I've got a brand sitting on that account. I was just going to watch these two because I just want to play. I'm playing a little bit of a catch up on these two accounts, so I'm just keen to bag some decent profit. I got 1,500 on that. Yeah, we're struggling up here. I've got a bit too much risk on these. I don't like the candlesticks. I'm getting out of that. So I'm just taking those off up there. I'm just going to shut the EA down on that one. So that's that one. Not a bad strategy. That was taking basically all 3 trades. So I had it set to use fixed lots. It was just taking a single lot. It was taking a $300 risk based on 10% of the opening range. And sorry, based on 30% of the opening range, which is what I changed it to. And it was taking a fixed pip trade at 200. So it's getting into 3 positions, a very small one, and which I don't really need that on. It's just for testing, really. But the actual strategy is taking 2 trades, really. One 30% of the opening range and one at a fixed pip. And obviously using those risk rewards. So works pretty well. That's probably going to hit my TP because I closed it out manually. Just got all that loss back from this morning, so I just wanted to go break even on it, really. Otherwise, I'd have let it run. Excuse me, I got a frog in my throat this morning. In fact, what I might do is let me just turn that off. Just going to save that. NASDAQ aggressive. So we'll see if we got that TP. So you can see where the TPs were. Just missed that time. See if we get it. What do we reckon? Was that a hit? No, I missed it by a piplet. Missed it by a pipette. Let's see if it gets it. Will it on? We'll have a look at the NASDAQ in a second as well, because obviously we've got a fast open. So I'll come back to that in a sec. So where we're going with the NAS, obviously, oops, whoa, just grabbed a stop loss. Didn't want to do that. Where was that? I'll stick it there. I know. So that is basically our double top there. Now, this unlikely this is going to be some kind of liquidity run, because this is a very old level going back to before Christmas. You can see obviously they unwound all the positions before Christmas, and all we've done over the Christmas New Year break is accumulate. So we've now got a break to the upside, but this break to the upside has been caused by the weak US dollar. So if we can get up to this 11,290 or 11,300 level basically today, which will be within an ADR, so it's easily achievable. That's where I would look for some potential shorts as well, because we're going to see a lot of limit orders set up here. This is a double top basically, and it's obviously previous support turned resistance. So it turned resistance. Let's go down to the hourly chart. You can see it better. So we got this level. We came down. We tested it. We broke through it. We tested it. We tested it. We came back. We tested it again. So this is a very, very strong support resistance level. So if we get back to this level, a lot of algorithms will be looking at that with limit orders ready to go there. So we will see some kind of reaction off of that. Either it will be a flush through and then a drop as they eat up the stops of all the limit orders, or the limit orders will overpower the buyers, which they'll be knackered by the time they get there. There won't be any buying left, and it will just pop off the top. So good level there, 11,300. Looking at the US 30, the Dow, we've got the accumulation break here. So that little level there. So roughly the same level, you're going to find some sellers stepping in as well on the S&P. What we've got on the S&P, nothing much but clear air all the way, to be honest, on the S&P. So that's the level, which is 39.63 roughly, which is just under ADR. So either way, an ADR hit to the upside on the indices today would indicate we've got a really weak US dollar. So that'll be the second day of weak US dollar on the trot on positive news. You've got to say there's some positive buying coming in soon, in which case we want to be shorting the indices and longing the US dollar. So I think I just stopped out on another one. Yeah, so I just stopped out on that one. Which was there. So I've still got two positions on. at the moment. It's starting to wane a little bit now, so we'll see. I'm just going to manually drag these stops up. Shouldn't really intervene, but this is tired, so oh, I've hit target. Okay, so I'm out of this one. This one's hit target. So shut that one down. Target on this is 2K. I've got 1,700 floating and 1,200 banked because of the loss this morning. So we basically, on this account, this is running a slightly different variation again of the strategy on the DAX. So we had those entries down short. We got 1, 2 entries short. They stopped out here. And then we flipped long on the opening range break of the high with 3 positions. Yeah, so 3 long. And that's obviously trailed there, but I'm just tightening that up manually because there's no point. If we're gonna get a bearish engulfing on that candle, I suspect we're gonna get down to here and retest this area anyway. So I'm taking that instead of that. If it carries on, obviously, I don't care. That's fine. But we have got some buying coming in on pound US dollar. Euro US dollar is still pushing. That might be pound. That's pound weakness actually, rather than US dollar strength by the looks of things. Right, so that's the RSIs covered. There we go. We didn't get that TP. Look, not quite on the Nasdaq, although it's having another go. If anybody's got any pairs specifically they want to have a look at, let me know. But I covered everything this morning in the London session. I can probably shut that down now. Do I want to take any shorts? Do I? I hate tight stops. This is what just worries me. These tight stops worry me. I don't like tight stops. Again, out. I'm not going to do it. Oh, wrong one. Oops. What did I just close out there? I had a pending order then. What pending order did I just close? Euro US dollar, wasn't it? So again, next reversal out on the hourly. Assuming this trade actually, we do get some US strength and we start to move, I'm going to add on a break of that low. As I say, this is a fairly aggressive position, this one. So I covered all the RSIs today. I covered them all this morning as well, and the hourlies. ADRs, obviously, you can see we've got the one we've just had hit, which is the Euro CAD. That's just come straight off of ADR, straight into a reversal alert. So there's a good short opportunity there. We've only got the one on the Euro. Hedged on the CAD. I can't really take that. So we've got that one, and Euro US dollar, obviously, which I've just got into as well. And I've covered those ones already. So looking at the current buys and sells, nothing much has changed this morning with sentiment. I refreshed this just before I came on. So this was sitting at 85 virtually all the morning. We're now sitting at 84. This was sitting at 70. We're now sitting at 69. So from an intraday sentiment, wrong button. From an intraday sentiment perspective, there's not a lot changed. So really the only things of interest from an intraday sentiment perspective there's no sells. There's a -4 there, which is the pound New Zealand and the odd New Zealand, which I've obviously already got both of those on. Short on the Aussie dollar New Zealand dollar, which is just back at break even now, and I'm short on the pound New Zealand, which is in profit. So those two are potential shorts. Other than that, it's all longs, strong ones anyway. So the only things really to look at are Euro CAD and Euro Yen. But I mean, again, this sentiment, not 100% sure on the Yen sentiment from COT at the moment. It is all short, which is kind of my bias, but it's just the fundamentals are throwing me out at the moment on it. But they are short on it, on the yen pairs. But with the euro and the New Zealand, they're a lot stronger than the yen sentiment. So we've got potential buys on those two. So the only things really I can see sentiment for intraday are New Zealand dollar CAD and Euro CAD. So New Zealand dollar CAD. Whoops, wrong one. I've already got my long on. Again, we've just been flip-flopping on this. Again, nowhere. Just gone nowhere for the last week and a half. So I'm long on it. I'm waiting for that break. I've got my TP up at those highs, and I think we're going to break higher, but I'm going to get out there because the last 3 times we've come up to that level, we've got out. So I like that as a long. It was a entry on Friday, and obviously non-farm helped it along with the Canadian dollar unemployment. And then the Euro CAD is already gone. You missed it. So that's an ADR hit. So there's not a lot else to look at really on those. So I'm out the DAX. So we've just put in a new low. So it's all bearish. So there we go. Pretty much done. I've just seen you've posted that the screenshot of the set file. Can you DM me the actual set file as well, David, if you're still on? So the gold set I put together for 8 a.m. breakout. 1 of 3 snapshots. So it made 27 grand off of a tiny little drawdown, isn't it? And that's only 150 trades. Should we set it up and have a look? While we're waiting for the US dollar to power up. So if you are still trading the indices, NASDAQ, I can shut this one down now, can't I? Yeah, so that's done. 970, that'll do. Where would I DM you? On Telegram? Yeah. No, don't send me this snapshot. Send me the set file. So go into the strategy tester. Yeah. And in the strategy tester, save your set file as gold M5 or whatever it is, and send me that. So it's going to save it into a location. So what I normally do is save it, and then if I want to send it to someone, I just hit the save button again, and then just basically drag it out into Telegram, and that'll send it. I can set it up in here. So it's on a 10K account. I'm going to do it on 100. You're targeting 800, which means I will be targeting. You're targeting Euro Yen also hit ADR. So you're targeting 10.8. So what? You're targeting 8%. Okay. Good luck with that. I should imagine that's not coming into the equation. See, 3% loss. Closing out true. So I'm actually looking at David's screenshot. So that's what I'm setting it up from. False, true. You're targeting 440, so I'll target 400, 110. Using fixed. TPs are all max. Targeting 4% gain. And 100, 800. And opening range is 3 o'clock in the morning. So that's 8 a.m. UK time, yeah? So so you're targeting 05. 10 and 15. And stopping trading at 20. So it's 15, 16, 17, 18, 19, 20. It's 5 hours. So it'd be 1500. Oh, wrong one. True, true, false, false, true. False, false. And trading stops are 300, 400, and 200. Not adding to singles. Okay. True, false, true. This must be 2.4 because you haven't got the cancelable pendings, but that should be true anyway, so that's fine. But let's test that on gold and see what happens. Let's visually test it first, see what it's doing. Oh, 8 a.m. New York time. Okay. So that would be 8 a.m. New York time is 8 a.m. New York time is 1500. You know, 5, 15, 10, 15. So you're 15, 16, 17, 18. So that's 3 hours, 15. Oh, yeah. So no, it's the same as, yeah. So, right. Okay. I'm going mad. Swiss yen's just hit. So we got massive movement on the yens again. By the looks of things, or certain yens anyway. Swiss yen's ADR. This is positive euro movement, I would imagine. So we've got a fairly strong euro at the moment this afternoon. Good strong Australian dollar as well. What I want is strong US dollar, please. It's typical that's going to take me out there, isn't it? That's that stop I accidentally moved, isn't it? Should have been $500 risk. There we go. So I'm just going to another pound US dollar short. Maybe 1 sec. Let me just post that. Right. So let's give this a visual run. Well, it's choppy. You see, I don't know if that's the right time or not, because it's working, obviously. Well, no, it's not working. It's losing a fortune. That's nice. £5 profit there. Yeah, it is. Yeah. So you have got that breakout volatility there. So that was quite nice. $1,600. The problem is obviously, and this is the issue with the opening range breakout EA. It's designed to trade opening range volatility. With gold, sometimes you'll have it at particular times. Sometimes it might start moving there. Sometimes it might start moving there. It's the same as Forex pairs. Yeah, when the London Open, there is no one candle in the London Open that just goes mad. It goes mad at some point in London, often, but you can never time it. And this is this slight problem with it. So the fact that you've got it set up to only trade two opening ranges is good, because if you put too many opening ranges in there, you're going to obviously run the risk of getting a false breakout on 3 positions and getting chopped. So it's better to use less opening ranges, but I haven't done any testing on FX or any other instrument yet. So that's pretty good, $1,100 there. So we're up to 2.8. We're not taking additionals, are we? So that's why that didn't trade. It only takes additionals on the first range. That might have been over the opening range maximum as well. I think that was set to 800, wasn't it? That's a lovely trade. Look at that, 3.8. Lovely. So it's gone short. Bit of a choppy day. Nothing you can do about choppy days. Mine's running the same as yours, David. Yeah, I'm on a 100k account, so it's exactly the risk parameters are exactly the same. All I've done is put a 0 on the end of your settings, so it's risking the same amounts, just obviously bigger because it's a 100k account instead of a 10k account. So it should get pretty similar results. Obviously, I'm testing a different time period, and this is what you need to do. Yeah, if you've tested 2 months, now take those 2 months where you've got decent results and run it over a different time period. This is what we call out of sample testing. So you tested it in November, December. I'm testing it in April 2021. If we get similar results in this time period that the test has never ever seen, it's good, because it means it's robust. So the strategy should work regardless of when you test it. You go, there's a choppy day, so your closeout level saved you there. 1,000 loss, unlucky that. Look at that. So unlucky. You got stopped out and then bang. What can you do? Again, this is where you go, oh, if only I'd used a X trailer instead of a Y trailer, I'd have caught that. But if you change it to a Y trailer, all those previous results will be different. There's no right or wrong. It's just a case of some days you're going to catch an unlucky stop, other days you're not. But it's just the way. That's the way the cookie crumbles, as they say. Again, the same thing there. Got chopped around at the open, still made $600, $700, but choppy open. You see that there, you see, this is where I think this, it needs to be tested long term, but this is where it's going to struggle. This is where it's going to struggle sometimes. The market decided to open 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles after that time period. This is the issue. You see, there is no every day without fail the indices open at an exact period. This is the problem. The volatility didn't actually come until there. We had just chop for a bit, and then they went and made their move. So, I mean, it works, but you know, it's the same as anything. You need to diversify. So, adding gold into the portfolio, along with Nasdaq, along with Dow, along with the DAX, chuck a Forex pair in there. That's nice. Look at that, beautiful $3 profit. Another nice profit there. 2 and another. Hold up. Already banked 2. 4. So it's a 3.5K day. Oh, look at that. Hit your max loss for the day. And then it went. You see, this is the thing, that the market didn't open until then. Totally different time. This is the issue. That is not how this does not happen at the same time every day as it does with the indices. This is the issue with trying to use this on other things. Using it on other things, basically all it is a breakout EA, which is absolutely fine. There's nothing wrong with breakout strategy at all. It's just you're just picking at random, really, some movement on the day, which is you know, it's not an issue. But that's what we wanted to catch. If you'd have set that to 4,500 or 450, you probably would have caught that. But again, you know, there is no right or wrong. Look at that beauty, 3,300. Unfortunately, made a $1,600 loss previously, so it dropped it down to 2.5K. But looks good. But needs to be running the optimizer. So optimizing, what I would look at optimizing on this, what we're taking 2, aren't we? 2 trades, and we're getting in continuous for that. So I would look at tightening these up maybe. So look at tightening this to not kick in after 400, kick in immediately. So just try some optimizations on those. Maybe go from 200s and go up in 100 increments up to, like, wouldn't want to go more than 6. Whoops. What's the average opening range on this? Yeah, I mean 120. 300, 400. $100 to 400, 100 to 250 odd there. That's 280. So it looks like 4, 5, 600 is going to be your absolute max. So when you're doing any testing, your trailers, when you're testing trailing stops, they don't really want to be much more than the average opening range, and we're going in with 110% of our initial opening range. So what's happening is at the opens, sometimes you're getting those opening ranges, it's moving out and then reversing, but because you haven't got any trailer that's tighter than the opening range, you take a full loss. If you had a tighter trailer when you broke out, immediately this loss would be halved. So if it doesn't work and it goes down, and you saw so many times where it did that. And this is the beauty of visual backtesting, why visual backtesting is so important. You know, situations like that where you took a loss, a full loss on that breakout loss, if you'd have had a trailer on it that kicked in immediately, your loss would have been reduced, not by a lot in this case, because it didn't actually close outside, but it would have been reduced a little bit. And then you'd have taken a full win on that one, which would have made that a little bit more of a profitable day. But this all needs to be tested. That's what it's there for, testing. We'll run it over a year and see. But and this is how I backtest. Basically, I take an idea, run it for a year, and go, right, that made a profit. We've got something to work with. So what could possibly influence this better? So then I'll sit there and I'll watch it run for 3, 4, 5 months visually, and I'll make notes like stops out so many times on false breakouts. So the way you stop false breakouts costing you money is by reducing your stops quickly. Yeah. When it goes, it goes. So it takes profit far too fast. Usually we can get twice as much. So don't use a TP, use a run, or closes out at 4% profit on days where we could have made 15 because it's gold and gold goes absolutely mental sometimes. Don't use the 4%. Maybe use one opening range breakout with a 300% TP and have the other one at 1,000% so that it just is a runner. So take one off the table, and then you'll be break even or trailed into profit on the second position. So if that comes down, worst case scenario, you just take one. But if it goes, the runner goes with you. Exactly what I had today on the, as we saw this morning on the Nasdaq, on the DAX. Oops. Still going the DAX. The US dollar still coming down, unfortunately, which is not good for my pound US dollar. So the opening range breakout that worked this morning, yeah. So there's your stop. If you had a 2-to-1 risk reward, you'd have been out with one of them there. If you took 2 positions there, out with one. Other one's going to be trailing in profit, and just let the second one go and let the market take you out when it's had enough. So you would use different TPs for each position. So we've got a bit of drawdown on that from 6,700 to 885. So it's drawn down by 20k there. But it's run up by 25. It's these, got to do something about, you're going to get runs like this. And I suspect what these are chop, because we haven't got an open. And this is what I say about when you're back testing, you've got to test in sample data so that you have a range you develop a strategy over. So for me, I develop my strategies over 3 to 6 months. I pick that time period of 3 to 6 months, and I will look for traits which work well within that time period that produce a nice profit. Then I'll take the same strategy. So I don't know, wait for this to, where's this going to? But most traders would snap your arm off for that, wouldn't they? Because what? They've traded for a year and they haven't lost money. Ooh, you're a profitable trader. At the moment, let's see. See where we get to. But let's say I've developed my strategy in that period there and I've got it working well. I then take the exact same set file and run it in that period there. So, because basically the strategy has been developed and optimized on this data. So this now I've got a profitable strategy and I'm happy and I'm excited and it's really good. And then I run it on this data here and it goes and falls out of bed. So it's actually useless. What it's got to do is on the out of sample data, it has to at least break even. So if you've got out of sample break even and in sample profit, you've got a profitable strategy. If you've got out of sample profit and in sample profit, you've got a very profitable strategy. But you are always, with every single strategy in the universe, going to get a period of stagnation where it doesn't make money, because that's life. So it made money, made 8 grand. It's not brilliant, but it's not optimized, is it? 29 grand a drawdown there, it's too much. And this is the issue, yeah. A lot of people with especially with 5-minute strategies, what people do with 5-minute strategies is they'll test it for 2 or 3 months, and they won't know it, but that's when they're testing it, and they're like, "Wow, this thing's amazing." And then I'll get hold of it and I'll test it there, and I'll go, "What are you on about? It's rubbish." Overall, it lost a tiny amount of money between that point and that point, but all they saw was that rose tinted glasses type thing. So it's got a lot of potential, but needs some optimization and some further testing, really. David, right, but one question: what is it that I have to purchase where I can backtest further out and more accurate? Right, so if you want to do more accurate backtesting, you need to purchase Tick Data Suite, which is on a website, I don't know why, called eareview.net. I don't know why they didn't get Tick Data Suite. Probably a competitor's got it. But this is what I use. And basically this, you can get a trial of it. It's not expensive. It's $50 or something. Oh, okay. I bought it. It's now apparently a monthly thing. They've gone over to a monthly plan. Blimey, I'm glad I bought it. It used to be $60. Or was it $99 or something? But yeah, you can basically use this. So you download this, and basically it integrates with your MT4 or your MT5, and it gives you this button. And basically what it allows you to do is download from all of these brokers. Yeah, all of these brokers are very well known for having very high quality data. So DarwinX is a broker I trade with one of my other accounts. FXCM has got really good data. I use Ducascopy. Ducascopy are one of the biggest, oldest brokers out there, and their data quality is very, very good. But pretty much any of them are pretty good. And all you need to do is match it to your broker data. So for me, I am UTC plus 2. The vast majority of brokers, you'll find out there will be UTC plus 2 on the US. Yeah. So you download the data, and then all you do is you match all the data you've downloaded will be highlighted in black. There's loads, literally so much data you can get, all stocks, everything. But I get all the FX majors, minors, gold, all the indices. And as you can see here, I've got 2011 to 2022. So I've got 4,100 days of total tick data. That's 400 million ticks. And you can put slippage, spread, all sorts of stuff in there. But basically, then I can backtest, if I want to go back to 2011, I can backtest gold back in 2011. Oops. And see what it would have done back in 2011. But with M5 strategies, trying to do M5 strategies, a year over a period of a year is really enough. If you want to go back further, you can do. With higher timeframes, H1, H4, and daily especially. Daily, I never look at any strategy that is not backtested over a decade. So I want to know that if I'm trading a daily chart, i.e. I might only be taking 20 to 30 trades a year, I need 10 years worth of data to test that on. 4 hour, I test over between 4 to 10 years. Hourly, I will want to test over anything between 2 to 10 years. Ideally, somewhere between 2 to 5, otherwise it takes forever. But you need a lot of data to test it properly. And obviously you get the 99% accuracy, which you won't get with your broker, because your broker's data is poop, to put it bluntly. Super tight NAS. Was that the one I just... Yeah. Look, I think being successful in the long run with breakout trading is dependent on whether you can tolerate letting the market run without you and only catching a few runners. Exactly, yeah, that is exactly it. And you'll see from this strategy, you are going to get a lot of this. You're going to get a lot of this. You know, and if you look at this, right, this is 140 trades. This is probably a few weeks. So for a few weeks, you will sit there and you will stagnate, and then you'll catch that. Yeah, I'm up 11 grand. But think about this from a monthly perspective. And this is why, you know, I'm running my EAs on the VPS and I'm trying to leave them alone as much as possible, because I'm not looking for a return of 500 quid or 300 quid or 1,000 or whatever every single day. What I'm looking to do is every month go into that account and pull 10 grand out. So if this does this for 3 weeks on the trot and then gets me back to break even that month, I can't draw on that one. But if I've got 4 accounts running, the other set files will probably have had a good win. And as long as you've got diversification on your settings, i.e. you've got strategies that are fast scalpers that are going to work in certain conditions. You've got others which are long runners, which are going to just pull in 5K but only hit 20% of the time. You've got others which are doing XYZ. As long as you've got a diversification, you'll be fine. As long as you can draw some money out from somewhere, that's the important thing. But you're going to get points. Look, this made a profit there, made a profit there, stagnated, made a profit, 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 stagnated, made a profit. So from there, all the way through that, there was no profit. Then it got to there. Then it gradually increased and kept increasing up to here. And then from that point onwards, we stagnated all the way to here. So that is all stagnation. I can't make a withdrawal out of my bank. My bank card's broken. Oh, and now I started making money again, making money. But on a daily basis, what you're going to see is losing day, losing day, losing day, losing day, losing day, losing day, losing day. This is where everybody gives up. And I've said this over and over again in this room. People don't understand that something with a 50% strike rate can lose 10, 15 times in a row. The edge is not day to day. The edge is week to week, month to month, year to year. This is why everybody gives up. They buy the market reversal alert. They take 10 trades with it on every single reversal alert and go, this is crap. It doesn't work. It does work. It's just that you put it on you took every bloody trade wrong for a start because you took every signal, but you just happen to hit a run where you're in an accumulation and you're trying to play massive long 5-to-1 winners on something which has been range bound for 3 weeks. Either way, you had a little bit of a losing run. Look at this, stagnation. High. Made a little high there, so we made a little bit of money there. From that point, it took that long to get back to break even for all this stagnation, and now we're off again. But overall, if you average it out, I'm going to be drawing 10K a month out of this. This is a 12-month test. On one instrument. This is just the DAX. Sorry, the NASDAQ. So, you know, you can run this on the Dow, you can run it on the FTSE, you can run it on the DAX, you could run it on the S&P 500, you could run it on the Nikkei. I've never tested it on anything else, but this is my set file, David. This is what we just traded this morning in here, this afternoon. This is what I've just literally traded live. It's not finished. It's not ready. It's not finished. But this is why I'm encouraging people to get in here and test this thing out. There are thousands. This is a test I did on the NASDAQ, right? In MT5. Let me just get rid of these filters. Okay. This is a test I did in MT5. I ran 515 permutations of the same strategy with slightly, and I was testing TPs basically and stop levels. Yeah. Sorry, there's not 515. That's rubbish. Ignore that. That's from an old set file. There's 2,000 variations of the strategy here that all produce a profit. Yeah, this is the profit column. Right, so this is exactly the same settings running. There's your drawdown. Let me just format this so it actually makes sense. Oh. It's not in pounds, it's in dollars, but anyway. Okay, so this is this set file. This basically is just testing lots of different variations of the same thing over and over again, 2,200 times in this particular case in the optimizer. And as you can see, like, ranges from 117k up to 300, 400, 500k in some cases, 500k return there. But this is the optimization I was doing on that thing. So you can look at this, and then when you live test it, it goes wrong. You go, oh, well, it's because of these. So you then rerun it, and you'll get more results. And you've got to go and come up with your own strategies. Because if I give everybody one set file that produces that, and everybody uses that in a prop firm, everybody gets banned, don't they? Because prop firms don't allow you to use commercial EAs that are designed to pass prop. So this EA is not designed to pass prop. All I'm demonstrating is what it can do. But if you use your head and you've got an account where you can draw down by 16 grand, you can make 129. If you can't draw down by 16 grand on your account, let's take 50% off of that. So now you've drawn down by 8,500 on your account, which is a 10k prop firm. You've only returned about 65 grand profit then. Can you live on 6.5 grand a month? This set file's out there. It's very easy to achieve that return. I've got thousands of tests which return that sort of result, because opening ranges work all the time. We just proved it in your gold one, haven't we? That gold strategy, you've never tested over that period of time. It didn't make a loss, didn't make a win, didn't make a massive profit. It only made you 8 grand. So many people out there, if you turn around to them and said, I can give you a trading strategy, it's only going to make you 800 quid a month. How many people would snap your arm off for that? God, 800 quid a month. My heating bill's just gone up by 400 quid in the last 12 months. I could do with an extra 800 quid a month. The set file you've just given me that is unoptimized and we've proved it isn't actually very good still makes 8 grand a year. Opening ranges are designed to do this. This is what we look for, right? So there are going to be these types of days, roughly 1 or 2 days a week. 3 days a week, you're going to have hideous results. That's the bit that people can't get past. This EA does that. It captures all this beautifully. Yeah. It's made 970 on that account this morning. It's made 700 on that account this morning, and it's made a tiny loss on this one. But again, look, exactly the same strategy, right? Running on 3 different accounts. Yeah. So look at the opening ranges on that account, that account, that account. They're all in the same place. It's exactly the same strategy running on 3 different accounts with 3 different results, because I've got a different trailer on that one to these two. So they just got different results. But if you put it in the strategy tester, you will find these in the optimization settings. Pick one, anyone. Just make sure it's not the same as everybody else's. That's what we've got to do. Just got to be careful with EAs, because prop will ban you. But as I said, I posted in the group the other day, didn't I? Yesterday, somebody contacted me about this, worried about it. It was evil. Evil is the name of a person, rather, not it was evil. One of the guys in the group, evil, contacted me about it, worried about it, because my Forex funds have a rule that says you can't use EAs that are, I'm going to find the link, 1 second. Let me find the link. Okay. So here's the rules on my Forex funds. Now, this is just one prop firm, but okay. Expert advisors and robot usage. This is what we're interested in. They allow expert advisors trading on your accounts. You don't have to send the source code unless there is suspicion of the following: tick scalping, which you can't do nowadays; arbitrage, which you can't do really either; signals from a third party; gap trading; account management services, or other services that break any other rules. So the only thing you've got to worry about here is somebody else running the account. They don't want one EA sending signals to 50 accounts all trading the same thing, because their risk is on 50 accounts. If this one bloke goes mental and loses $1 million, they lose 50 million. Yeah. So that's what that rule is there for. Using third-party expert advisors is okay, so long as it is not managed or traded by another party. Yeah. Okay. It's about your ability to trade. The way that you set up the EA, right? This EA that I'm providing has got 1,000 million combinations of different settings. You're setting it up, you're trading the strategy in your way, okay? Anything. And then you get down to rule 17, clarification on the use of third-party software stroke vendors for trading. This is the clarification they put in place, basically. Anyone using any vendor that promotes the passing of a prop firm evaluation or challenge will be banned, okay? So these are the guys that you see these adverts on Facebook where they are saying, we will pass your evaluation for you. What my Forex funds and all the prop firms do not want is some idiot that has been trading for 2 months, has tried an evaluation 10 times and failed every time because he can't trade, getting an account from someone else who does know what the hell they're doing, and then they're just going to blow the account anyway. So what's the point? So this is what this is there for. A lot of these pay-to-pass evaluation firms are using an EA which is massively over-leveraged and hugely risky, and it will pass a test, but it will not sustain. Like David's example with gold, he's had 2 months where it's returned 28%. I've just proven over a period of a year, it will only return an 8% profit, and it will use a 26% drawdown. Yeah. So anything can pass and have a lucky run. But what they don't want is you using an EA where you get, there's a lot of these EAs on the marketplace where you can have a high risk, a medium risk, or a low risk setting. And you've got an input that gives you a choice of those 3. You haven't got a clue what that thing is doing. What's the strategy behind it? How's it working? What's it doing? Yeah. They want to know, prop firms, that you know what you're doing. So I teach you how to use what the opening range breakout strategy is, and I provide a tool that allows you to trade it the way that you want to trade it. Same as the market reversal alerts indicator. I don't condone this passing prop firms. Of course it will pass a prop firm. It's a successful strategy, but it doesn't pass. The way that you set it up to trade the opening range of the index is what passes the evaluation, not the EA. You can do it manually. Yeah. Very easy. So let's say this is the opening range. Buy stop, sell stop. I'm an EA. Yeah, you don't have to use an EA to trade this strategy. It's a well-known strategy being used in stock trading for decades. So, you know, and this is the thing with the EA. I'm trying to get people to go off, and like one of the guys in the group who's come up with this strategy that I just showed you in here this morning, although this is a variation of his version. This isn't what I taught. I didn't teach you to skip a candle and go for another one, then skip a candle and go for another one. But looking at it, it's a bloody good strategy. But it's his. So if he gets caught using the opening range breakout to trade this strategy, he can turn around and go, "This is my strategy. Look, this is how I set this EA up to do." What this EA does is it allows you to pick a range at a time, and then it takes trades for you. Yeah, I haven't provided him with a set file or anything. I haven't said it'll ever pass an evaluation. I've got no clue. So you've got to, you know, get in here and start mucking about with this. Just gave you a clue there as to the settings. Everyone's going to be quick, rewind, pause. Anyway, so do your due diligence, put the time in. The tool is there and the tool is there to be used. Let's try this as a matter of interest. Let's try this on the Dow and see what happens. I've never tested this on the Dow. Be interesting to see what this does. I get a feeling it probably won't work particularly well because the Dow has a different range to the NASDAQ, but we'll see. US dollar index, Seymour, is hitting lows of June 22. If cable continues to correlate, then we are targeting H4 wide range bar. Aussie dollar US dollar has just hit RSI 21. So it's actually Euro US dollar you want to be watching, not cable, because Euro US dollar is the inverse correlation to the Dixie. So we're up at 125 ADR at the moment on that one. Whoops. So yeah, we're breaking out into obviously highs. Blimey, going back a long way. So we're breaking out into highs now, basically. So this area here that I highlighted is kind of next stop, which is 175 ADR today. So if the Dixie obviously continues to come down, Euro US dollar will continue to push, and so will pound US dollar. But this is the actual inverse of the Dixie. This, if you turn this upside down, it's exactly the same as the Dixie. So yeah, up to there. David, gotcha. I'll continue optimizing it. I'm getting the tick data now. Enjoy testing the EA. Going to record the testing in Excel. Yeah, got to record your testing. Yeah, try. If you're going to use the opening range breakout EA, to be honest, I wouldn't concentrate on gold. I would concentrate on the indices. It's what it's built for. It's built for momentum and volatility breakouts. And that's the whole edge of the strategy, is every single day of the week we know exactly when that momentum and that volatility is arriving. It's that candle. Every day it's that candle. So this is on Dow. So it's all right. Not the nicest equity curve in the world, is it? But, you know, you've got stagnation, positive move, positive move, positive move, break even to stagnation, positive, 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 nice run, positive. Stagnation here for that long, however that long that is. I really wish they would put that in the MT4 backtester. Up to there. Then a bit more stagnation. So it looks good. This is on the Dow. I have literally never put this in the Dow before. This is the first time it's been there. So it's got potential on the Dow as well. Look. So we returned, what was it, 110 or something on the NASDAQ. So the Dow, that's not over yet. The Dow's 87 off of a 16k drawdown. So again, dependent on how you're using it. I mean, to me, I would be absolutely happy as Larry with 8% drawdown on my account in a year and returning 87%. Or if you put the NASDAQ and the Dow on together, 100 or 200 grand return off of the likelihood is this drawdown will happen at roughly the same time. So, but again, you can test this. We can get all these trades out and we can stick those in the quant analyzer, and we can see when that drawdown occurred, and we can see how long exactly the stagnation period was on the strategy. I should have run that over the let me run the NASDAQ as well, and then we can see what the stagnation correlation is, which is very important. Portfolio correlation, rather. I'll just quickly run that in the background. So if I load that up. So average return is 7 grand a month, 43% strike rate. It's always good to scan through this for anomalies. So there's your equity chart. So we had a period of 73 days of stagnation on the Dow. So basically 2 months you didn't get paid. But boy, was that a payday. That's nice, wasn't it? And there's your high point, high points there. So each green dot is basically a new high. So we had a push there. Obviously, it had a little bit of drawdown to start with. So in realistic terms, that's when it started to work. So you'd have a green dot there, green dot probably there. So each of these green dots you see on the screen, if you can see it, is when we started making more money. So these are the drawdown and stagnation periods. And this is a typical equity curve. You're always going to have stagnation. If I load in, so that's the Dow. We'll just wait for that test to finish on the NASDAQ. We'll be able to see what the correlation is between the two strategies, which will tell us whether or not they drew down at the same time. So if you get the equity curve on the Dow having its negative run there, while that one's having its positive run, they cancel each other out. So you wouldn't actually have made all that money. But here, when we've got this massive stagnation period, if the NASDAQ equity curve looks like that, you just take money out your NASDAQ account. You get the money between the two, don't you? DAX is starting to wane a little bit. NASDAQ still going, just coming up to resistance. So here we are on the NAS. So this could be where we start to see these limits trigger. So if you want to get in short on the NASDAQ, oh, what the hell? This is potentially where we're going to start to see some limit orders trigger. So watch this level around here. We're either going to get potentially a fly through, pop out the top, or we're just going to get a load of limits trigger and a big reversal alert come in. Potentially. It is a really old level though, so I'll be very surprised if the market isn't watching this though. Look at it. Good level. Diamond, so my Forex Funds challenge is coming along. Today is day 5. you're at 4.73% with 24 days left to go. Nice one. Really happy with how the ORB is performing. Cool. Awesome. 4.7%. This is, you only need another day. You know, this is the thing. Those big days are the ones that make it. You know, you can pass in a day, can't you, if you get a really long one. I mean, I didn't have a lot of risk on that. If I'd have had a lot of risk on that, we could have made a serious amount of money today, couldn't we? Got to manage your risk. Just wait for this to finish, and then because I'll be interested to see what the correlation is. This is a good test because I want to see that. So there's your drawdown in dollars. So nice, easy way to see where your bad areas occur. So 15K is the max there, which happened here. You'll see on the monthly actually. So April and November and that initial January. So, you know, when you're doing this sort of testing, it's like, if I'd have started my evaluation in March, I'd have passed. If I'd have started in January, I wouldn't have passed. I wouldn't have passed in February or got back, so I'd have to do another evaluation. If I started my evaluation in April, I would have got a free retest in May. If I'd have started in July, I wouldn't have passed. But if I'd started in August, I would. If I'd started in September, I would. And then October, I'd have drawn out 22K. Happy days if you started evaluation in September. You know, this is all stuff that you have to take into account and nobody teaches you or looks at. It's like, when you start trading matters massively to how you get on with a trading strategy. If you start trading position trading with me in beginning of December last year, end of November, you'd have thought it was absolute crap because we got into two things which squeezed hideously and it was horrible. If you started position trading with me when I started trading oil in August, you'd have think I'm the best thing since sliced bread. Same with any strategy. You pick up the opening range breakout strategy when we go into an accumulation for 7 days, it's going to be awful. You pick it up in September, you're going to be laughing all the way to the bank. In fact, you'd have passed an evaluation, drawn 10K and then drawn 20K, taken that 30K, gone and sat on a beach for 6 months and done nothing. Well, you might have done. I'd be trying to make more money. DAX, no, NAS. Okay, so there's the NASDAQ. Oops. So the NASDAQ returned 129K off of a 10K drawdown. So looking at the chart on that, so there's our equity chart. So you can see, remember the Dow had its stagnation here and the NASDAQ had its stagnation there. Why have I not got them both? Let's put the portfolio together. Oh, I've done that wrong, haven't I? There we go. So that is your NASDAQ, that's your Dow, and that's your correlated strategy. So with the two running together, you would have had a period of 35 days where you would have gone flat. So you can see here, the NASDAQ didn't perform very well there. The Dow didn't do amazing, but it countered that one. This is when the Dow was having its huge stagnation period. The Nasdaq did well. So overall, that is your equity curve. Your maximum drawdown on both accounts is, where's it gone? 14,900. So putting the two together did not increase the drawdown on the Dow Jones. So brilliant. So it's 217k. Average 18 grand a year. Can you live on 18 grand a year? And not have a losing month, which is, I don't believe. There'll be a losing month in there somewhere. Again, this is back testing. It's not, we don't know what's going to happen in the future, do we? But yeah, pretty good. Considering I never tested that before in the Dow. I doubt this won't work in the DAX. Of course it won't work in the DAX because it's the wrong time periods. So let's do a really strong test on this, shall we? Let's try and trade the DAX in the afternoon. Let's do something nuts. I'll bet this doesn't work. This won't work. I'll be amazed if this returns a positive result because the DAX doesn't move anywhere near as much in the afternoon. Nasdaq's pushing out above that high. So we're just trying to get through the highs at the moment. God. US dollar's really weak. Could really do with an inside bar here. There you go. So this is now, we're trying to trade the Frankfurt stock market at the New York Open, basically, which is not the most sensible thing in the world to do because all the volume is going through the New York exchange, not through Frankfurt. But it's not losing money, is it? We're still up. We obviously, we're going to take some more drawdown because we're not, we're not trading the optimal instrument at the optimal time, are we? Wow, look at that. Actually making money in the afternoons. Look. That's something I haven't even looked at, whether or not it's worth trading the DAX in the afternoon. Maybe it is. I mean, if you look at this equity curve, it looked on paper, and this is why it's important to check your equity curves, yeah? Because if you look at the equity chart and then look at that one, that's it. What you see in the strategy tester, when you go into the results in the strategy tester report, what you see is that, and you go, woohoo, 59 grand. And you go, oh, we only drew down by 20. So we've returned pretty much 3 times our initial risk, which is amazing. But when you look at it in here, you actually realize that the vast majority of that profit came here. So actually, for 2/3 of the year, you really didn't make a lot of money. The DAX obviously had a slight change in the way it performs, and we had a nice end to the year. So it's why it's important to look at the equity curves. And again, this demonstrates very well portfolio diversification. Yeah. If you just trade one instrument with one strategy, you're going to get one equity curve. If you mix equity curves that are profitable together, you get a bigger profitable equity curve. So if we chuck the DAX into this now, you'll see that we'll make even more money, but the equity curve here will flatten out a bit, probably. Let's chuck it in there and see what happens. Okay, so there's the DAX. You see the stagnation on the DAX is 143 days, 4 months. because that's not, that is not, you shouldn't be trading the DAX in the afternoon. Wrong time to trade it. So if we stick those together into that portfolio, now our equity curve is even higher, making 276 grand. Our drawdown has now increased. So we've actually made our drawdown worse by gaining an extra, what was it? 217 grand with 15K, 276 off of 19. So we're now making 23 grand on average a month instead of 18. But we've had to take a little bit of extra drawdown. So, but our stagnation is now 37 days in that period. So our stagnation has moved down here. Whereas our stagnation was here, where we didn't make any money for 35 days. So there's not a lot in it, is there? But if you start trading here, you'll be thinking, oh, what a load of rubbish. If you trade with the DAX and all three of them, if you didn't trade with the DAX, you'd be thinking, oh, this is brilliant here. But then again, you'd think, no, it's not very good here. If you weren't trading the DAX, see what I mean? You've got to test all of this stuff. Got to know how to do it. Otherwise, you're just going to get a strategy, trade it, and every day it's going to make 3 days loss, and you're going to go, oh, it's rubbish, and throw it away. Do you split the risk in half if you have 2 strategies in the same account? No. What I would do is open 3 accounts. So, for example, if you were trading, if you can't fund yourself and you have to go to a prop firm, have one account trading the DAX, one trading the Dow, one trading the NAS. Yeah. So this one has a stagnation period of 3 months. Yeah. Can't spell. Doesn't matter. You make and draw your money out of these 2. If that one has a period where it goes mental and blows the account, doesn't matter. Draw the money out of these 2 and then reset that one. Try again. Diversify. If you put them all into one, then yes. If you're looking at this portfolio with all 3 strategies in together, as we saw, your maximum drawdown on a $500 risk, $1,000 risk per trade. So we're risking $500 on that and that entry. There's 2 entries there, so it's actually $1,000 risk per trade. So, yeah, you would, if you're running all 3 on one, then you would want to drop that down to keep the drawdown lower. But in my opinion, you're better off sticking, having multiple accounts, because then you're not jeopardizing. Don't forget, and I'm only talking about trading prop here. If you're going to trade prop, if you're trading prop and you blow your account, you've got to wait 2 weeks before you get it back. If you blow one account out of 4, nothing's changed. You're still trading, which is why I don't put all of my money into one portfolio in one broker. When I trade with my own capital, I only put some of my capital in the broker, because if that broker blows up or something happens, I still got to work, haven't I? So, and it's the same prop. You spread your risk across multiple strategies, multiple accounts, multiple firms. I trade with EA, I trade with Take Profit Trader, and I trade with my Forex funds. When I've got the accounts, I blow accounts like everybody, because strategies go wrong. Like everything, you're going to get drawdown. But what I'm trying to do is get a new set of accounts which I can run with minimal risk. So, looking at this, right, that's a lot of money. So you'd need a 300K account or 3 times 100K accounts to return that. But there's a risk there, isn't there, that you could blow all 3 of them? Maybe. I don't know. It could happen. We don't know. We might have a hideous thing happen with Ukraine, or I don't know, something might go wrong and you're going to blow all 3 of those accounts at once. So if you just dropped that risk down to $500 in total instead of $1,000 in total, you're only going to get 130 grand a year. But that's really, really risk-free, isn't it? We know, we've tested, we can see that we're not going to have a period where all 3 strategies are performing badly. There's a period where they all go sideways. But if you reduce the risk down by 50%, even if they all went down at the same time, it's highly unlikely they would all blow, or you would hit a max loss. Or if you're using your own funds, a point in time where you go, this strategy is crap, throw it away and move on to the next. And that's the thing that kills everybody. That's the system hopping bit, isn't it? Everybody system hops. You try the market reversal alerts indicator, you have a wonderful couple of weeks with it, and then it goes wrong for a few, and then you dump that indicator and you move on to ABC whipsaw moving average indicator. Or, you know, that's what we do. Oh, so it doesn't give me a big enough strike rate. Yeah, it gave me a good strike rate, but only gave me 1-to-1 risk reward. It's rubbish. You're the trader using it wrong. Everything works if you apply it correctly. Anyway, so there you go. So there's a good insight into back testing, and I'm not going to use that on the DAX. But you know, worst case scenario, if you used a unoptimized set of opening range breakout settings, it's just going to do nothing but not lose you money. That's a nice thing to know, isn't it? The worst case scenario with this set file that is not optimized, never tested, and not designed to run at that time with those settings, the worst thing it could possibly do is not lose money. How many strategies out there are like that? Such a good strategy. It really is. We like it. Like it even more if the US dollar index, the US dollar powered up today, but anyway. DAX is still pushing. Shouldn't have got out of those trades, should I, on the DAX, but never mind. Sitting in drawdown at the moment now, so it's mainly these 2. So I'm at 0.5% drawdown on both of them at the minute. I've got all the losses back from this morning. Back to break even, basically. So I need these guys to get a move on. I need the US dollar to stop messing about. Really, really, really annoying that this thing is just not able to recover from non-farm today. I was I said this morning, didn't I? I said there was a strong possibility this was going to happen, but I really wasn't expecting it. So this is where my stops are, obviously, which is outside of where I'm expecting it to retest. Where? I don't know. This is where we retested after the propulsion move. So let's hope that is where we're going to start a move. Not one red candle so far today. Sorry, since non-farm on the 4-hour. What is wrong with these people? Do they not understand it was good news? David, learning a lot today. Going to put all the valuable information on the back tester. Yeah. Quant Analyzer, yeah. So if you want to get hold of Quant Analyzer, it's free. This is part of Strategy Quant. So Strategy Quant is a piece of software I use for strategy development and testing. I use it for lots of different testing. But this is a piece of software which is designed to test strategies, and you can load any strategy that you've got results for into this. So if you want to get hold of this, it's Strategy Quant. Whoops. And it's Quant Analyzer there. So you can get a free version and a pro version. There's not a lot of difference. You don't need the pro version unless you want to. Depends. It's hardly any money. I think it's $30 or something, isn't it? Yeah, it's $30 monthly. So if you want to do this type of testing, if you've got one EA, for example, ORB EA, and you want to get a load of back testing done in the strategy tester, and then go and chuck it into something like this to build a portfolio and test and get verified results and things, just buy it for a month if you want to. But you can do up to 4 strategies in one portfolio, like I did here. So you can merge 4 individual strategies into one portfolio to produce this. So if you want to, you can take a screenshot of this and then take more tests and put them in, and then take another screenshot. You can do all of that. You can you use your head. You can always get around stuff. But there's also lots of other stuff you can do in this as well, comparing results and stuff of different things. And the other thing you need, this is really important, is portfolio correlation here. So correlate, I would probably go hourly. So if you get 2 different equity curves which are very, very, very similar, you'll get what's called correlation of the portfolios. So anything that turns up green here is okay. Anything that turns up red is not good. And there's lots of different color combinations. If I do this by the day, I might get some correlation. No, I haven't. You see it's getting darker green. If I do it by the month, I'm sure I'll have correlation. There we go. So anything under 0.5 is okay. Anything under 0.15 or 0.2 is awesome. And what we're looking for is to make sure that when our trades, what this does, this correlation, it takes all the trades and it checks when the trades were closed. And basically I'm saying, tell me whether or not all of these trades closed at the same hour. And what it's saying is that less than 0.7% of them closed at the same hour on the NASDAQ as they did on the Dow. So that there says, comparing the results of these two, the trades all closed at different times, which tells you it's a different strategy, which tells you it's got a different profit and equity curve, which tells you you can run them together. If you had something that had a 1.00 correlation with something else, it is exactly the same. So anything under 1, anything under 0.5 basically is awesome. So 1 is highly correlated, 0 is there is absolutely no similarity whatsoever. Anything under 0.1, 0.15 is absolutely awesome. But, you can go and read up about all of this. It tells you there's loads of stuff you can test in here. Very good bit of kit. I completely forgot about it until the other day, till someone said to me in Telegram, and I was like, oh, why didn't I do that? So I did. All right, guys, I better get on. It's 4:30. I've got other stuff to do, so I will let you crack on. Trades at the moment are just sitting there at the minute. I'm just sitting in drawdown, waiting for things to move. So I've still got oil on, still got New Zealand CAD on, still got pound New Zealand, Aussie New Zealand, Aussie CAD's tanked. Look, well, it's not tanked, it's popped. So I've got 3 positions on that. It's popped this afternoon. So again, looking for a retest down here on Aussie CAD. But yeah, everything is just kind of sitting at the minute. Got to be careful because I can't take more than 5% drawdown in a day. So I've got to be a bit careful. I'm position trading, hybrid position trading, and prop is not great for position trading because it can be dangerous on the odd drawdown levels. So, all right. So I'll be back tomorrow morning at 7:50, same time as usual. We'll trade the DAX again. And I'm just going to keep working on backtesting basically for the ORB strategy and see if there's more and more set files I can produce. And then, coming here every day, the more you watch me doing things with the ORB, the more it will make sense on how you can go and find your own sets. But I will put some more set files out there. But obviously, every time I produce a set file and I put it out there, if 10 people start using that set file, it's not good, is it? You've got to use a variation of every set file if you're going to trade prop. If you're not trading prop, use it. Use what you like. It doesn't matter, does it? But just got to be a little bit careful with the rules on funded. So, All right, have a good day, rest of the day. Hopefully it's profitable, and I'll be back tomorrow morning and see you then. Have a good one.